The tap is closing. How Japan crashed the global market. End of carry trade. Intro: The butterfly effect in Tokyo. The global financial system is connected by invisible strings. A central bank governor in Tokyo presses a small button and stock markets crash in New York, gold spikes in London, and crypto markets turn into a bloodbath. For years, the secret sponsor of global markets was Japan. Because the Japanese yen wasn't just a currency, it was a free ATM for the world. This was called the carry trade. But now, that tap, which has been open for 30 years, is closing. So why is Japan ending the era of free money? Where will this massive capital go next? And how will it affect the money in your wallet? Welcome to the biggest short position in financial history. Chapter 1. The Paradise of Free Money. What is carry trade? First, let's understand the mechanism. What is a carry trade? It's simple. You borrow money from a country with 0% interest or even negative interest. You take that money and invest it in a country with high interest, like the US at 5% or emerging markets at 50%. The difference is your effortless profit. Japan has been living through the lost decades since the 1990s. Because the economy wasn't growing, they kept interest rates below zero. Global hedge funds, banks, and billionaires saw an opportunity. They borrowed trillions of dollars worth of Japanese yen. With this cheap money, they bought US stocks, they bought Bitcoin, they bought bonds. So the fuel behind the massive market rallies you've seen in the last decade was actually cheap Japanese yen. Chapter 2. The party is over. Rate hikes and panic. But every party has an end. Inflation has returned to Japan for the first time in years. The monster of deflation, falling prices, has been replaced by inflation. The Bank of Japan, BOJ, was forced to raise interest rates, and that is where the apocalypse began. When rates went up, borrowing became expensive for carry traders. Investors panicked, saying, "I need to pay back my debt." They sold their Bitcoin, their Apple stocks, their gold. This was the reason why markets crashed 10% in a single day in mid-2024. Japan effectively said, "No more free lunch." Chapter 3. Who will replace Japan? The yuan and the franc. Now, the big question is, where will investors go to find cheap money? Who will sit on the throne of the Japanese yen? Economists have two strong candidates on the table. First, the Swiss franc, CHF. Switzerland also keeps rates low. However, the Swiss economy is small and its currency is too valuable. It doesn't provide enough volume for massive global funds. The second and strongest candidate, the Chinese Yuan, CNY. This is the big surprise. While the West and Japan are raising rates, China's economy is slowing down, so they are cutting rates. The old equation was cheap Japan, expensive America. The new equation is becoming cheap China, expensive world. Goldman Sachs and major banks have already turned their eyes to China for borrowing. The concept of the yuan carry trade is being born. However, China is not a free market like Japan. There is a risk that the Communist Party could lock down the capital overnight. The world is on the brink of a much riskier gamble. Chapter 4. The Future of Japan. Zombie Companies. So, will Japan be saved by raising rates? No. Japan has another curse, a mountain of debt. Japan has the highest debt to GDP ratio in the world, over 260%. Even a 1% increase in interest rates could mean the Japanese government can't pay the interest on its debt. Also, the country is full of zombie companies, thousands of businesses that only survive thanks to cheap credit. When the tap closes, these companies will go bankrupt one by one. Japan is facing either a massive cleanup or a massive collapse. Outro. Cash is king. The butterfly effect from Japan taught us this. There is no such thing as an endless rally in global markets. Those rallies are often financed by cheap debt from somewhere else. The era of the yen is over. The era of the yuan is risky. In the coming period, smart money will win, not easy money. Next time you see a headline saying Japan raises interest rates, remember, it's not just news, it's a signal of an earthquake for your wallet.